Hi everyone, hope you're all doing well, and today we're going to talk about DraftKings. You guys want to see this video, so here we are. Talk about DraftKings earnings, and I think as well as talk about DraftKings earnings, I think it's as well a video about talk about the share price drop as well. But before we get into that, smash the like button, subscribe if you're new around here, hit that red button. We are about 100 subscribers away from 10,000, so close. So if we could get there this week, it'd be absolutely amazing. If you do want to start investing and buy some shares, it's a pretty good time to be honest with you right now. So links to some brokers in the description. I think if you join through the free trade one, you also get a free share worth up to £200 as well. And if you do want to know when I'm buying and selling companies, join the Patreon, link is in the description. But let's get on to DraftKings. So yeah, we'll talk about the Q1 in a little bit, but first of all we'll just talk about the share price right now, because I think that's one of the big things that we also wanted to speak about this, I guess, from you guys' point of view. As well as that, I did the poll yesterday, and I think Boohoo was a very close one, and maybe tomorrow, or maybe even a double upload later today if I've got time when I finish work, I might do a video about the stock market. We'll see what happens. But yeah, talk about DraftKings share price to start with. So at the moment, it's down somewhere like 37% from its like 52-week highs, and yeah, it's a bit of a drop. 37% is a huge amount when you think about it. That's so many people have sold out from that point of view, and it's a really strange situation because it came after the Q1, which was really impressive. And the crazy thing about the Q1, I felt, is that the numbers were really strong. And the funny thing is the stock actually reacted quite positive off these earnings. I think the stock on the day was up like 3-4% on pre-market, and then it just, it was already joining in part of this like crash of the growth stocks, and then it kind of put that recovery off earnings, but then it just went back to joining in with the other growth stocks that are selling off at the moment. So the actual earnings itself were taken positive, and we saw the bounce, but it just got once again caught up in this big sell-off of what's happening in these growth stocks, and especially yesterday. Yesterday was a really tough day. DraftKings going down to the, I think it's somewhere like $45 now recording this video. I know it's in the $40 range, but it was a massive drop. And I'll be honest with you, I normally say this at the end of the video, but I did buy some shares yesterday, and normally I only post that on Patreon. I'll tell you guys at the end of the week, but I thought I'd just let you know that. And also, I think last week I bought quite a few shares, so I am buying this one really heavy at the moment. It is my biggest position now in the stock market, and it's at the moment my biggest position quite a bit in the stock market now. I actually sold a little bit of 2 UK companies, which I won't say. You have to be on the Patreon to know that sort of stuff, but I did kind of trim 2 UK companies as well to try and one was for like an 80% profit, the other one was for like a 30% profit. I sold like 10% of them positions, and also that profit there also went back into this one. And I think in the long term, this is a great opportunity. I always said, I think the first time I ever covered DraftKings, I always said my price target would be around like the $40-$45 range if I could, and I just thought, right, it's never coming back here now. There's so many positives that happen with this company that it won't go down there, but it has. And now that I've got this opportunity, I'm just going to keep buying and buying. I'm probably going to get my cash pile all the way down to get the average on this one way low as I can. And then worst case scenario, if my position does get too big and makes up too much of the portfolio, when the stock starts to recover and it starts, gets back to break even or even a slight profit, then I'll just pull that out and get it back into my cash pile and then build up a nice cash pile again. But yeah, I am really focusing on buying this one really heavy, and that's just a little bit about the share price. It is a crazy drop. I mean, we'll see how low it goes, but I never thought it would go this low after so many amazing things that have happened, and especially we had the bump off earnings as well. So yeah, not much to say on the share price front, just apart from it looks absolutely ugly. But yeah, I'm sure great companies always come back. This is just, DraftKings is caught in this cycle, and when the money comes back into growth stocks, I'm sure this will be one of the first ones that are picked up really. Now going on to Q1 was really impressive. I think for me, Shopify was the best Q1 that I've seen this quarter. Their numbers were really strong. And then I think probably InMode, and then after InMode, I think DraftKings would probably be there in my top 3. Very close between, I think Turtle Beaches were very strong, I think Corsairs were really strong, but I think these guys would take the last place on the podium. These guys had some really good earnings, so we'll go through everything there. Now, there was a lot of hidden gems in that earnings. There was actually so much really good information in this earnings that I can't actually fit it all on the whiteboard, and I'll just try to cover like the most important things, I guess. But it's a bit disrespectful to some of the things that were in there because they were very good. So I guess the first thing is to go on, let's talk about the revenue. This DraftKings is a growth company, so the main thing with a growth company is that we want to see that they're still growing pretty much. And they did that. They did 312 million revenue, 175% growth, which is really impressive. Let's not forget, analysts at the start of the year were predicting DraftKings, I think, to grow somewhere around, it was something like 30-40% in revenue or something. I think the high end was like 50%. But yeah, they've absolutely blown it out of the water. This was way above what analysts were expecting, 175% revenue growth. Now, this was actually like the most important quarter for DraftKings. It was also a big quarter for Gang and also GNOG, which are two other of my positions in this industry. Because this said to me, okay, what we thought was going to happen is happening. This quarter was a big quarter for new launches and new launches into new states. Now, basically the whole bull case on DraftKings is, look, gambling isn't allowed in the US just yet. Well, online gambling isn't allowed in the US in a lot of states at the moment, and it's just been allowed. Now, as someone from the UK, that blows my mind, and I know how big of an industry this is. And DraftKings is the market leader in the US in this sort of state. They're battling it out with FanDuel, but they're up there, and they're really starting to use that market leader advantage to their best as they can. But I wanted to see, like, okay, when we launch in Michigan, I think it was also Virginia that launched. There was also some other places, but I forgot which ones it was. I'm kind of going off the top of my head from Friday, so there's been a few days since then. But yeah, the new state launches, what we wanted to see is, like, there's the demand there. DraftKings are still growing. Like, we wanted to see good numbers come out of them, and they did. 175% revenue growth is absolutely fantastic. Really, really strong launches in them states as well, so that was fantastic. So we can see here there's the demand, there's the continued demand that will go on, and also from a GNOG and Gang point of view, that's really promising numbers for them guys. So yeah, that was really good. Now, because of how strong that launch was, they actually put their outlook up to 105 billion to 115 billion, and that was from 900 million to 1 billion. So yeah, they had a little bit of a jump in their outlook, and I'll actually go through these numbers in a little bit because I thought they were really interesting. So yeah, because of how strong this first quarter was, we did get an outlook raise. So yeah, that was also pretty impressive. Now, I'm going to say one thing that like pretty much a lot of the other stocks, a lot of the bears have come out in the stock market, especially on growth stocks now, because the rotation's happening. And one of the big things, like a lot of growth stocks that are being used against them, is that the fact that, yeah, it's putting in good. I think I actually saw one that said, oh, that's weak revenue growth, and I was like, what? But yeah, that was just a crazy one. But there was one that said about the profit side of it. Now, the thing that people have to realise with DraftKings is that they're focused on growing revenue and growing users, and eventually, very much like a skills, eventually, like, the amount of users and the longer they stay on the platform levels out and they get to profitability. This always happens with growth stocks. I'm going to talk about Square and Shopify in a little bit. Very much like them. Them guys were very similar, and they leveled it out. And look at the numbers that Shopify put in on profitability this year. That's what happens. That's part of the growth stock game. And if you don't realise that, then you're going to have a very hard time investing in growth stocks. But profitability will come at some point. And I think people also forget, and I think DraftKings should have probably played on this actually in their earnings call, or maybe even in the investor presentation, is last time we actually had earnings, New Jersey was said to be profitable. Now, they've been in New Jersey, I think, for 2.5 years, I believe it is, maybe even around 2 years. They haven't been in New Jersey for that long. And that's now got as a profitable state. So you can see that it takes about DraftKings somewhat like 2.5 years to actually get one of them states profitable. So yeah, I mean, you got to realize that when new states are launched, they put a lot into the marketing, a lot into the promotion. Come and do your bets with us, and we'll give you this $50 free coupon or whatever it is. They have to get these customers in. They have to stop them going from FanDuel, and that's, they keep them customers forever, and then they keep this growth coming in. That's how you stay the market leader. That's part of the game. And if you struggle with that kind of understanding that, then I don't know what to say really. But yeah, I mean, this is something they have to do. But what is showing is how good everything's going on in this company here. So that was really, really good. So yeah, massive revenue beat, raise on the outlook. They also went on to say they're currently trying to make them completely vertical integrated, which was great. Partnerships were very strong. They were talks about the partnerships like the NFL. NFL is also a season where the marketing goes up as well, so just be careful of that. I think Q2 and Q3 should see the drop in marketing, but it should rise again in Q4. Obviously, the NFL's a massive season. I think it was the NBA, I believe it was, also the golf and the UFC, I believe it is. So there's a lot of they talks a lot about partnerships in there that are just getting stronger and stronger. I think the big one for me is the NFL, like to have the biggest sport in the US and then to be the official partner for them guys. I think that's just, I think that's the only one I ever need to really keep up to date on. But I think the other ones are really strong as well. Don't get me wrong, I'm not gonna totally disregard them, but they've got the one that I wanted them to have, and that's why I get so excited about this one. Social side of it, they're building out the social side of the platform as well to kind of keep it more like friends that playing it with each other and everything like that, awards and stuff like that. So they're trying to build that part of the platform out. They talks about that a little bit, and there was loads of other little things in there as well. But those are kind of a few standout ones to me that was in there. They also went, and if you haven't listened to the conference call, go listen to it as well, and you'll get a bit more detail than what I'll say on this video here about them. They did say there was 3 potential new states coming. I think one of them was New York. I can't remember who the other 2 were, but they were not in guidance. So if they do happen to come this year, that will be only amazing. If we do get them like Q3, Q4, that'd be amazing, because that would then totally blow expectations out the water. But there is potential for 3 new states that are not in guidance. And what else was said on the conference call is that Q2 continued strong growth. So yeah, it looks like what we're seeing here, hopefully, like Q1's normally okay. I mean, you got like the back end of the NFL season, you got the Super Bowl in there, you got March Madness in there. So Q1's normally not too bad. So yeah, it's somewhere in the middle really. So that was pretty good numbers for Q1. Q2 and Q3 are normally a little bit quieter, but the thing with Q2 this year around is because the sports calendar's absolutely mixed up because of the CV situation. I think you do get the back end of like the NHL season, like playoffs and Stanley Cup final. You've got currently the baseball, Major League Baseball is currently going on, and I think the NBA is normally not here. So you've got some sporting events that aren't normally in this category happening. So that might help Q2. Q2 is not normally that strong, but because of the delay in sports calendar, it could be okay. There was also something about, I can't remember which day it was, but they've kind of had to slow down the sign-ups. So that might affect Q1 a little bit slower than what helped Q1. Q3 is normally, once again, a little bit quieter. Then obviously Q4, then you get the boom because the NFL season comes back. So Q4 will be probably the strongest quarter. So Q2 and Q3 might have a drop off. We'll see. We don't know. But they said it still continues strong. We won't get a Q2 update until August, so it is a little bit of a gap now until we do get the next earnings. But what will be very interesting in Q2 is that the numbers that they put in. So previously what they guided on, what they've kind of come out with is they expect Q1 to do 28% of this year's revenue, and that was previously low 20s. So they've moved that up, saying that Q1 was better and taken some growth that they won't be able to achieve again in the next Q quarters. We'll see if that's kind of sandbagging or if that's actually true. We'll see what exactly happens there. But yeah, they said Q1 will make 28% up, previously low 20%. They said that the Q2 will make high 20% up. That's probably because of the delayed sports calendars. Q3 will make low 20% up, so that will be the weakest quarter, and then Q4 they will make 30% of the revenue up, which will be the strongest quarter because of the NFL season. So it seems like Q2 could still be strong. Q3, the weakest one, Q4 will be strong because of the NFL. Now, if they carry on doing these numbers with these percentages, I kind of ran the numbers, and it looks like they will do currently 1.115 billion on revenue on this guidance. So when we look at Outlook, which was 1.15, that would make really sense, because that is just a little bit short of their actual outlook guidance. So it looks like what they've kind of suggested here would make sense, and they would come just short of their higher end of their outlook that they've just given. So yeah, the numbers there kind of all make sense from what outlook they've given, but this is what I actually kind of thought. I think Q2 could be a big shock to everyone if they do deliver on this. So Q1 currently did 312 million. Now if on Q2 they did 312 million, and Q3 they did 312 million, so they did the same revenue what they've done here, and then Q4 we obviously have the boom in the NFL, which will be higher. That would put us on 1.33 billion. So it would be very interesting to see what they do in Q2 and Q3, because I think if they've sandbagged it a lot and we even just get somewhere very similar to what they've done, it's very easy still, in my opinion, for DraftKings to beat this outlook they've given here. So yeah, if the 1.15 billion, I think this year they could be pushing 1.3 billion. So that would be very impressive if they could. So we'll see what exactly happens. Like I say, it'll be interesting if they kind of sandbag this Q2 and Q3. We'll see what exactly happens. I think the sports calendar will make a big difference, but I still think it's very achievable for them to even beat this outlook still. I think there might be a little bit of sandbagging on, but like I said, Q2 in August will give us a very good idea where they're at. But the good thing as well about DraftKings actually pulling out this revenue guidance, and also the numbers they could potentially do, is the actual valuation of the company is getting cheaper and cheaper. Obviously, you're paying up for a company now that's doing 175% growth. The revenue is actually getting a lot better than where it was. And yeah, this valuation is dropping on it, especially with this pullback we have right now. With the valuation is actually really attractive. So everything there is pretty good, and that's just a little example there of how easy it could be for DraftKings to actually beat the guidance. Now, that's kind of everything that I kind of had to say about the earnings. For me, the earnings were a 10 out of 10. They're better than what I could have asked for. Very, very good earnings. There's not much else I can say on the earnings point of view, just that they were amazing. The drop is a miracle, and I will keep buying this company. And just on the last point, which I wanted to talk about Square and Shopify and what DraftKings has very similar to these two companies. So DraftKings for me is now my biggest position. It's my biggest position because I look at the company and I can see I love the company. I really like buying companies that I know in and out, and also that I really love. I look at DraftKings and I can see DraftKings and I can see, okay, I can 100% see how this company is going to be successful. The market leader in this industry, an industry that I'm a massive fan of. I love sports. I don't mind a little bit of an acca every kind of weekend on the football myself. So I kind of like being in these industries because I know the industries. I like sports. I really like DraftKings. I love the branding. I love the company, and this is why I like buying companies that I'm a massive fan of, because I'm just like, if I get cheaper shares, I'm just like, gimme. I'm just keep buying this one quite heavy. And the thing about buying these sort of companies, and especially like DraftKings is the first company for a very long time that I've seen, and I can see the path of where they're going to be. DraftKings at the moment is just in like North America. You think about North America, they're only in a certain amount of states. Now they've got the potential to actually go to more and more like North America states, and I think there was even a mention on the conference call. What do you do after North America? Well, then you can go to Canada. You know what you do after Canada? You've got the whole world to go to for DraftKings, and this company is so early stages. Like, even though it's now developing to putting in billions of revenue, we're not even talking about the potential even like 10 years down the line. Like, this company is still going to be growing for so many years. Like, this is still so early stages, and it's got so much potential that we're only saying like this is it in like a few states in North America. We're not even talking about Canada. We're not talking about worldwide. There's so much potential. And the thing is, as well, is I really love the company as well. And it's the first company that I've seen, I think, since Square and Shopify. Like Tesla, I really like Tesla, but I never actually thought Tesla would go on. When I'm buying Tesla at like $40, I never thought it would go to where it was so quick. And I really like that company, but I never, when I looked at Square and Shopify, I thought, okay, these two are going to be massive. I looked at Tesla and I thought there's a lot of potential here, and I love the company. But that one took me by surprise. But Square and Shopify, I looked at them two, and I looked at Square and I thought, a mobile payment company that then develops past that as well, all the other stuff that they offer, all the merchants and everything, it's a game changer. It's everything that PayPal should have been, and it can be a multi-billion company. And Square, went on to do that. I made some good money off Square, and recently I bought back in as well. And you know, I looked at that company back in like 2017, and I was like, that's a 10x opportunity at least. You know, it's a multi-billion company. You know, it's a future S&P company. Shopify, very similar. I looked at that and thought that's going to disrupt online e-commerce. You know, rather than having to set up all these things, do it yourself, make it nice and easy. You have, you know, the fulfillment side of it sorted for you, the marketing side of it sorted for you. I was like, that's another game changer. That's once again a company that will 10x multi-billion dollar company. Now the difference is with Square, I bought Square. Shopify I looked at and I went, oh, the valuation's a little too high. I'm not going to buy it. And I watched it go from, I don't know when it was, like 2018 or something. I saw it go from like, you know, 200, and I was like, oh, it's a bit expensive. 400, 600, 800, 1,000. And I knew how good the company was, and I should have bought the company, and I didn't, just because of the valuation side of it. And there was another part of me as well that I think at that stage I got a little bit hung up on like profitability a little bit. And I was like, are these guys actually going to make profitability? And you look at the profitability these guys are putting in now, and it's crazy. It's absolutely crazy what they've just put in on profitability. And I should have bought that one, and I didn't. And that was a mistake that I made, and I should have bought that one. And I love the company. It's probably one of my biggest regrets in the stock market is not buying Shopify when I saw it at $200, even $400. And I knew how good the company was going to be, and I didn't because of the valuation. And I should have done. And DraftKings is the first company that I've seen since Shopify and also Square where I've gone, you just can see how big this company is going to be. You know, the branding side of it, how well they're developing, how quick they're developing, how fast they're growing. You know, it's the first company I've seen since Square and Shopify where I've gone, these guys are going to be, there's so much potential. Like this is actually like in the next 5 years, a 10x opportunity. And I thought, okay, we're not doing a Shopify mistake here again. You know, I'm going to buy this one. And like I said, the more that I get, this price goes lower and lower. If I can buy it like $45, it's insane. If I can get my average into the 40 range, I'll be so happy on this one because I just, you know, this is one that I'm a massive fan of, and I think it has so much potential in the next few years. So I'm going to keep buying this one. Like I say, really good quarter, and also like I think this is just a golden opportunity that it's the first opportunity I've seen for a long time, which I'm like, wow, you know, there's a lot of room here. Don't get me wrong, there's other companies that I own that I still think, you know, have good 5x potential, but this is the first one that I've looked at for a long time, and it's like a $30 billion company or something, maybe a little bit less than that. It's the first one I've seen at these sort of prices for a long time. I've gone, I can see this easily being a 100 billion plus company. I see it being a potential S&P 500 member, you know, years down the line. And yeah, it's great. So I hope you enjoyed it anyway. For you guys that wanted the DraftKings video, I will do a video to talk about the stock market maybe at some point, maybe today, maybe tomorrow. Yeah, see how busy I get. And also, I know a few guys are desperate for a Boohoo video, so I will try to get that at some point up for you guys anyway. But hope you enjoyed it. Smash the like button if you're new, subscribe as well, and I'll see you in the next video.